Hi, it's Ian Coleman from PIA First. Today is Sunday, the 6th of May. We're going to be looking again at the FX majors, running through the dollar index first and then breaking down the bias from the dollar index into the other currency pairs to look at setups for this week and what we think the medium term to long term bias is on the 8 FX majors. So like we said, the dollar index daily chart, we've stopped, paused around this level, quite a critical level. It's a Fibonacci confluence area. 92.54 is a 161.8% extension of this move. And then we've also got here the 61.8% pullback level of this bearish move. So we've got a confluence area. We are looking for setbacks to be limited. Okay, we broke out of this bullish channel formation to the upside. Reverse trendline support is at 92.04. Now we could spike through there, and we've got our bespoke support here at 91.71, and we're looking for that to be prime support for the dollar this week. We could see pretty mixed volatile trading, and in fact our first resistance level this week here is here, 93.22. So we're going to be buying dips and then looking at this critical level to see whether or not this dollar move is going to be extended this week. Okay, breaking that down, or that bias if you like, back down into euro dollar. Let's just put the weekly chart up first. Okay, we've broken the wedge formation to the downside. We've got two support levels here. We've got 119.11, and I believe we made a 119.10 low last week, and then a break there, and we've got support coming in at 118.13. So with a 161.8% extension level located at 118.98, it's unwise, we believe, to sell at current levels. And if we break down to the daily chart, we can see this 161.8% extension here. Impulse moves to the downside, so we believe that the medium term bias is still for lower levels. Going into next week, we've got minor resistance located at 119.83. We've already tested that, if you can see, on Friday. We just pulled back slightly lower. However, this looks like an inverted hammer, gives a slight upward bias going into the beginning of next week. Our prime resistance is here, and that's at 121 the figure. This offers quite decent sort of short entry for a medium-term bearish outlook in euro dollar, because obviously we can stop up, put our stop here, which is just above the previous swing low. So it was support, it now becomes resistance. So that's really our short zone, if you like, for euro dollar next week. Sterling dollar, we broke after making a bullish 5-wave sequence. We posted a bearish outside week. We've broken the channel formation to the upside. Reverse trendline resistance is at 137.42. We've got support at 134.92, bespoke support. We made a 134.86 low last week. So again, not looking to sell into this support. We're actually going to be looking at selling into rallies next week. Just to highlight the resistance that we've got some resistance at 136.33, but it's only minor, and our major resistance is at 137.36. So that's just through again what used to be support now becomes resistance. And if we go back to the weekly chart, selling at 137.36 offers very good risk reward, because we've got this reverse trendline resistance at 137.42. So that's going to be our prime area to get short in sterling dollar this week. Dollar Swift's been really hard to even find any sort of resistance to the upside. Obviously, the big figure psychological level has been taken out a couple of times now. The long-term bias is still to buy dips. In fact, we don't have any resistance, bespoke resistance in this pair now. until 106.76. And if we look to this chart here, we think that's going to be quite a prime level. So we're in a wedge formation. We've got this trend of higher highs. I mean, it currently comes in at 105.80, but probably going to take us a while to get up to this level. So I've just moved this price label further along, if you like. So this is going to be quite a critical area, we believe, for dollar Swiss in the months ahead. Now, support, we've got bespoke support, we've got at 99 the figure. So again, this is broken this wedge formation to the upside. What was resistance now becomes support, and that's coming in at 98.75. So 99, 98.75 is looking like a very important and potentially very profitable area to get long in dollar Swiss next week. Dollar yen, we highlighted that 110 the figure was our bespoke resistance last week. We actually made a 110.03 high. We've seen a move to the downside. We were actually short at 109.70, so we just sold it on a mild pullback. Now we've just hit this trendline support of this bullish channel formation, and we've seen a little move higher. However, there's no clear indication that this move to the downside is coming to an end. And in fact, we've got resistance going into this week at 109.50, then again at 110 the figure, obviously, but we haven't got any support until 108.02. Okay, and that's very close to this trendline support, which is coming in around about 107.80. So that's our target area, 108.02, 107.80, going into this week. Dollar CAD, we're in a very large wedge formation. Trend of lower lows is coming in at 131.13 at the moment. This is our most important chart, one that we've been focusing on last week. Very mixed, very volatile trading. Rally sold, dips bought. We're in this tight range. RSI is virtually around the 50 level, which highlights that we're non-trending. We're looking to buy dips. We've got bespoke support here at 127.59, and that's very close to this 38.2% pullback level of the whole of this upward, quite impulsive move at 127.64. So that is our area to get long in dollar CAD this week. Now, Aussie dollar is quite an interesting one. Let's just get the charts on. We've broken out of a weekly wedge formation to the downside. We've got reverse trendline resistance located at 76.44. Now we've got some very mild resistance this week at 75.67. Now if we see a break there, we could see a bit more of a sustained rally up towards 77 the figure. So our bespoke resistance is at 76.85. So we're looking for sort of 76.50, 76.85 to cap buying. But the immediate bias does look to the upside for this pair, but we're still going to look to sell into rallies and just monitor price action on a daily basis for Aussie dollar. Euro sterling, mixed volatile trading last couple of days of the week. We've got an ABCD formation, corrected formation located at 88.53. We did have some bespoke resistance at 88.31. It's held a couple of times. We've now broken through it. We've got a 13 count, a DMARC 13 count on the intraday chart. That normally means that we've come to the end of a rally. However, there's lots of support to the downside in this currency cross, if you like, at the moment. 88.10 is quite a critical level. We've got this swing high here, which comes in at 87.97. We've got our bespoke support located at 88.10. So we've got to see a break of this zone here to even contemplate starting to short euro sterling next week. Euro yen, we've been short of this currency pair, which seems to be forever now, but we now are getting a move to the downside. We're actually been short since 132.70. The monthly chart highlights a bearish outside month Marubozu level, which is the midpoint from the open and the close at 132.76. Rallies up to that level, got sold into. Weekly chart, we like this area here. It's a very long-term target. It's a 261.8% extension at 115.14, and it's also this previous swing low. Daily chart, we've spiked through channel support on Friday, and we just pulled back slightly. That's at 130.07. Now we've got support at 129.73, which is our first medium-term target, and then we've got nothing until 128, the figure. So if you're not short, we'd still look to get short in this currency pair. And our first resistance to the upside, let's just get this on, is at 130.80 this week. So we're looking for any sort of upside correction to be limited, and we're still looking to target a lot lower levels over the medium to long term. Okay, I hope you've enjoyed that video analysis, and I hope we have a good week, and I hope you have a good week, and we'll speak to you again next week. All right, thanks very much. Bye.